And now for business news. Economic reports today ignited confidence and sent the Dow Industrial soaring more than 200 points. Today's impressive stock market performance comes on the heels of several days of big losses, capped by yesterday's 268-point drop. Joining us from Washington, D.C. is international business expert Ebong Eka. He's also the author of Start Me Up, the No Business Plan business plan. Hey, Ebong, it's good to see you.
You too, Debbie.
You know, these oil prices, they've been forecasted for a long time, been in the news since Thanksgiving. Why did they scare the markets yesterday?
Well, yesterday people weren't sure if OPEC was going to cut production. And as you can tell, or maybe many have heard, that there's a rift between the Iranian minister with the Saudi Arabian minister. Saudi Arabia does not want to cut production, while Iran, which is part of the OPEC nations, wants to cut production.
I see. Well, Obama said that since coming into office that he wants America to be less dependent on foreign oil, move, of course, more toward greener sources. So is America growing less dependent on oil as a means of fuel?
Yeah, we're doing a lot better, which is not a lot, but it's still enough. Oil consumption in the U.S. is down 0.3%, which is pretty decent. And that is based on renewable energy, as you mentioned, as well as people being more aware of their consumption of oil. Whether they're taking public transportation, they're not going out as much, maybe even teleworking.
What is the silver lining here for this news?
Well, the great news about sinking oil prices is it's bad for the oil stocks and the oil companies, but it's great for consumers across the country as well as across the world. And here's why. Inflation ends up being down. The Fed will keep rates down as a result of that. In addition to that, consumers' purchasing power is actually a lot more. So think of it this way. If my gas prices are less, I have more money to spend during the holiday season, which leads to why retail sales is up.
Well, you just led me right to my next question, and that is, what are the forecasts, and might the holiday sales prop up some of these lagging oil prices?
Exactly. Energy stocks aside, everything is coming back as a result of sinking oil prices. But in addition to that, last month, it was a 0.7% increase in retail sales, and the outlook for this holiday season is even more so. People are spending more money, whether it's through cash, and a lot of people are going back to credit, and they're feeling a little bit more comfortable about the economy, which is why they're going to be buying bigger ticket items.
Why is that better for the economy, Ebong, for people to use their credit? It's not necessarily better for our individual personal finances.
No, because what's good for the economy as a whole may not necessarily be good for an individual person. So it's always good when consumers actually spend money, whether it's through credit or through cash. But on an individual level, you're right. The answer is no, it's not good for them at all. But more spending can lead to more movement of items and products, as well as more small businesses, as well as bigger businesses growing their sales.
So the Dow was up over 200 points after the sell-off on Wednesday. Was that just a correction of what happened on Wednesday?
That's basically it. The market's been fickle. Some people are trying to take gains off before the end of the year, but for the most part, a lot of people aren't really sure where things are going. They're just happy that the economy is actually getting better for a lot of people in this country.
All right, Ebong Eka, thank you so much. Good to see you.
Good to see you.